Hurricane's Grill is an Australian restaurant that has significantly suffered COVID-19 repercussions and operates by physically serving its clients. In order to recover from COVID-19 repercussions, they have decided to choose from the below three scenarios. The first scenario is no changes. Second scenario, introduce deliveries and takeouts. And the third scenario, shut down operations. Based on research and analysis, it is seen that the best case scenario would be introducing deliveries and takeout. However, the owners find it fit to shut down and cease to operate.
In each of the scenarios, we will be looking at some of the features, the advantages, and downfall if the company decides to follow any of these paths. Firstly, in the base situation, the restaurant right now have only a walk-in system. This ensures that the restaurant will be able to provide the best services to the customers and have complete control over the food hygiene. Moving on to the second scenario, the restaurant has now made the decision to have a delivery and a takeout system incorporated. We have taken this as the best case scenario. The restaurant will have additional revenue being generated due to the delivery orders. It will also be able to reach a wide range of customers as not everyone will be willing to travel the distance. They will also incur other costs such as to recruit additional manpower to ensure the customer orders are being taken and concerns are being addressed. The final scenario is where the company decides to shut down its operations. The investors do not want to put in any more money to afloat the failing business. They want to get out before things get worse. In such a situation, the restaurant will have to pay off all liabilities and shut down its businesses. This is considered as the worst case scenario if the company opts for it. Now that we have looked and understood what each scenario will consist of, we will be going over some of the graphs and calculation to understand it further. Our main comparison is the cash flow statement. In the graph shown, we can see that all three scenarios have been depicted. If the restaurant decides to continue its business without any changes or move to having a delivery system, the net cash flow will be a positive figure. We can see in the best case scenario, the restaurant will be generating a much higher number due to all the extra orders. The restaurant has also informed they are predicting the cover to increase to 400 in 2031. But on the other hand, if the decision is to shut down operations, the net cash flow has been calculated as negative 2 million dirhams. The excess costs such as shutdown costs, liquidation costs, and write-off of PPE all have resulted in a negative figure. Following the cash flow statement discussion, a few more comparisons are being looked into right now. First, we have the net present value. The calculation has been depicted in the presented graph. As discussed before, the cash flow for scenario 1 and 2 were positive and scenario 3 negative. The same has been seen in the NPV calculation. Looking at the calculation for scenario 2 of introducing deliveries, it has produced the highest NPV among all. The next graph which we will be discussing is the relationship between revenue generated from delivery and takeouts and the aggregator cost. The aggregator cost is the cost the company will pay to the delivery partners. The company has informed that approximately 25% of the revenue is paid to the delivery partners. This cost is unavoidable as the restaurant needs them to deliver the food to the customers. It is a significantly small percentage they would be losing as compared to the additional inflow of revenue. The final comparison is the cost of food and other costs between scenario 1 and 2. There is a considerable increase in this cost as the restaurant needs to buy additional raw material and other perishables in order to provide for all the additional orders.
Hi, this is Pooja, and I'm going to be talking about the conclusion. Many restaurants were severely affected due to the corona pandemic, and each has handled it differently. Hurricane Grill is one such restaurant, which is dine-in only restaurant, and especially hard hit during the corona times. After doing the NPV analysis in the report for the three possible cases, which is the base case, best case, and worst case, it can be seen that the worst case scenario is actually the least beneficial option with negative NPV analysis and no future prospect. The other two cases have a positive NPV and are the better options for recovery of the restaurant and invested capital. The best case scenario is the most optimum approach as it involves multiple services offered to the customer, and this would diversify the revenue paths for the restaurant. So moving on to the recommendations, the restaurant could partner up with various popular delivery marketing services like Zomato, Talabat, Deliveroo, etc. This would help them to gain more customers online. And the restaurant is located in Dubai Mall, so relocation of the restaurant would lower the cost of rent and maintenance. And this could also lead visibility to potential customers in different locations. The restaurants can also look options to optimize its menu and do promotional offers, events on weekly, monthly basis, and host pop-up experiences which will help them maximize sales. They could keep happy hours or host an event, get an artist. That would actually help them get more attraction towards the customers. The restaurant could also start upselling, which gives customers a choice to try uh, new dishes as a sample, and they could also adopt a loyalty program to incentivize them, and so that the customers, be it coupons, be it offers, anything to give that attraction towards the customer to keep coming back to the restaurant.